Fibonacci projections or expansions are Fibonacci ratios used to project potential future support and resistance levels. Now, we just talked about extensions, and we're going to show you now the difference with the projections. Projections take into account the initial price swing or cycle and its retracement to project the target areas for the following cycles, and that's the difference. The Fibonacci extensions, they only take into account the initial price swing and project everything past 100% of that price swing. Right, whereas the projections take into account the initial swing and its retracement. So you have 2 points of measurement. Okay, the high of the price swing or the low of the price swing, and then the higher or the low of the retracement, and it's projected from there. Now, we're going to use several different expansion or projection levels you can see here. But the ones that I have highlighted are going to be the most used, the most common ones that we see day to day. Okay, so mark all of these down, and you're going to want to put these into your projection or expansion tool. But the most commonly used are going to be the 100%, the 127.2%, and then 161.8%. And you'll often hear me refer to these as equal legs for 100%, simply the 127% projection and the 162% projection. You'll often hear me refer to these when we're looking at charts and I'm performing analysis. The 100% to 127.2% zone is the most common zone we will use for price targets. And then the 161.8 is a key level for what we call our extension setup. And this is where we will project a price move to be a continuation. Okay, and there's two things that we'll use for that. We'll use the 162% projection as far as what we're showing you here, and we'll also at times use the 162% time projection. These are used to give us our next probable price move. And it also gives us an objective way of looking at it, of how we're trying to determine our next market swing. Now, a little tip: if the market does not pull back, let's say we're looking for a price target on a particular swing. If the market did not pull back 50%, let's say we have a shallow pullback, and we'll show this on a chart here in a moment, but if we have a shallow pullback, 38%, we don't make it to that 50%, then it's better to actually use the extensions to look for a potential price target of that next cycle. Okay, so when we're projecting with our analysis future price cycles, 50 to 62% pullbacks, use your projections. Less than 50%, use your extensions. Let's just go ahead and pull up a price chart and have a look here. Okay, so here's a 15-minute chart of the euro. And here we can see we have price rally, pull back, and then rally again. Now, for our extension tool, or excuse me, our projection tool, we're going to go ahead and use this right here. And on this platform is called the trend-based fib extensions. All right, but these are actually projections or expansions. You'll hear them called expansions on a lot of platforms. So what we would do is we would measure this from the low to the high and then back down to the retracement low. Okay, so there's 3 points: the low, the high, and then the low of the retracement. And you can see how this projected. We have this extension, this 161.8%. This right here, okay, our normal price target is equal legs to 127. When price extends to that 162% in this cycle, that gives us what we call a bullish extension. Okay, so the way I would actually mark that on my chart would be for a bullish extension, right here just gives us a clearer look of the initial rally, the pullback, and this cycle extended to the 162% Fibonacci projection level. Once we see this extension, what we call an extension or bullish extension, we then maintain a bullish look for the next price cycle. So then we had a corrective setback, and then price continued to rally. Now let's look at the extensions on the larger swing. Let me just get rid of these. And I'm going to go back to our regular extensions here. And we're going to measure from this low to the high, okay, back down to the low. The low is right here, this point. And you can see how this projected out. Now, as we were in this rally, after we had this corrective setback, we were looking for price to move to equal legs 127. That was our initial price target. Okay, you can see how we found some resistance here at equal legs 100%. Moved up to the 127, found some more resistance. Okay, we didn't have any divergence here at the high. Okay, not between the larger swings. We pulled back, then we continued to that 162%. Okay, so now we had an even larger bullish extension. Because remember, this price cycle is all the same degree at the higher degree. Okay, it subdivides here into smaller degrees. But as far as this degree that we're looking at, this is all one cycle. Okay, so that gave us a continued bullish outlook for when prices were pulling back. All right, so we had a continued bullish outlook for price continuing to rally here. Okay, now for the most part, you're going to see us using the equal legs 127%. All right, so here, let's just say we had this price rally. See this price rally right here of this cycle, our pullback. We would look for an initial target equal legs 127%. So let's just pull our extension, or excuse me, our projection tool. This made a new high, so we're going to measure that rally back to the pullback here. And you can see price rallied again after the setback, equal legs 127% zone. Okay, let's continue to move forward here. And let's measure this particular cycle. Next cycle from the high to the low. This cycle moved into the 127% or equal legs of 127% zone. Okay, and found some resistance, started moving a bit sideways. Now, this is sideways price action here. Sideways price action, so naturally, in an uptrend, we're looking at this as still bullish. We have price moving sideways, MACD coming back to the zero line. This is called neutralization. Okay, that's a bullish look. The other thing here, I mean, we see that with the price action, but you can see we didn't extend here. We didn't extend, so we're maintaining that bullish bias at this point because of price action. But the other thing, and I'm going to jump ahead a little bit here, the other thing we'll use in this scenario, because if we just look at this swing, it looks like it could have possibly extended, but it didn't, and you'll see that a lot with price moves that extend in time. Okay, so we'll use our Fibonacci-based time extension here. Okay, so from the high to the low, you can see this is the 162% time extension. Price rallied, continued to rally through past that expansion. Okay, that past that projection right there. So that would have also given us a bullish bias for the next move. Okay, but again, I'm jumping ahead a little bit there, so let me just, we'll cover that here shortly. Okay, so we continue to look forward and price continued to rally. Okay, but go and do this on your own. Take your Fibonacci expansion tool and just start to measure. Here's another swing. Here's a pullback. Okay, where did we find some resistance here? Equal legs 127. Another consolidation, just like we saw over here, another consolidation. Another MACD neutralization pattern. Again, a continued move to the upside. Now, this particular swing looks like it even extended. Looks like it even extended. Let's just go ahead and check that out. Add on our other tool here. Let's look at the high, pull it back to the low, and you can see we even extended here. So this was an extended cycle to the 162. All right, so we have another bullish look. We'll look for this trend to continue to the upside, which we can see it continued to rally. We had a setback and we continued to rally. Okay, folks, so that's how we'll use the Fibonacci projection or Fibonacci expansion tool. Very useful tool, extremely useful, and something we use every day quite often. So now I think things are starting to come together a little bit here. You're seeing the divergence, right? You're seeing what we're using for the pullbacks to measure these. You're seeing the patterns that we're looking at. And we're going to get more into the patterns here very shortly. But now you're able to see how the market does indeed move in these measured types of patterns. All right, now obviously it's not going to be perfect. There's going to be times where it doesn't. Okay, but we're going to show you so many different examples here throughout this course. And I know I've said it a couple times, but it's going to be really hard to deny it. And folks, it's not magic. It's not magic. It's really not. It's human behavior. Everything is mathematical and calculated. I will talk about this a little bit later when we get into some of the Elliott Wave primer and how I view the market. But again, a lot of folks look at this like it's, they don't like using Fibonacci numbers just because they can't get their head wrapped around it. But it's a way to quantify human behavior. Okay, it's a way to quantify human behavior. Okay, so let's go ahead and talk about the next section. Is pretty short. Fibonacci time extensions. We only use time extensions for really one purpose.